Good morning, everyone. Now we will start the morning call. US markets were closed on Monday, yesterday, for a Memorial Day. But the US futures markets were flattish. Asian markets are around 0.4% up. This is mainly because a slew of European Central Bank officials yesterday said that ECB has room to cut interest rates as inflation slows, uh, in line with expectations for a rate cut on June 6th. So with this, the debate now is shifting to subsequent moves where markets have fully priced in two rate cuts by October this year. And in other news, Brent crude is stable at $83, and FIIs continue to sell in the Indian markets. I will now invite the technical team to take the call forward.
Yes, thank you, Jihan. Good morning, all of you. This is Swati. Today, the market is likely to be open on a flattish note, and we are likely to witness some sideways momentum during the day. On the technical front, as of now, Nifty is facing a strong resistance at around 22,100 levels. Sorry, 23,100 levels on the closing basis, which gives some sort of a cautious sign. At the current levels, 23,000 will act as a crucial resistance levels. Any move about that level only will see the extension of this rally towards 23,100 to 23,140 levels. Whereas on a downside, as of now, the immediate support is placed at 22,870. Below that level, we can attract a profit booking, which might take a Nifty towards 22,800 to 22,740 levels on the downside. Coming towards the Bank Nifty for today intraday purpose, 48,940, 48,600 are the support levels we need to keep eye on it. Whereas the resistance is placed at around 49,740, 50,100 levels on the high side. Coming towards the Fin Nifty, 22,170, 22,300 are the resistance level we need to keep eye on it. Whereas the support is placed at around 21,830, 21,680. Stock specific UPL looks good on the technical front. The stock is well placed above the short-term moving averages, trading in the upper band of the Bollinger. So overall technical setup is looking good on the charts. We are looking for a target of 545. One can take a long position at the current market price as well by maintaining a stop loss of 510. That's it from my end. I request Amit to take a call for.
Yeah, thank you. Good morning, everyone. On the derivatives front, if you look at the overall OI position, as I mentioned yesterday, that once if Nifty managed to view close about 23,100 level, then we will see major liquidation of a 23,000 call right strike. But Nifty failed to give close once Nifty struggled near 23,100 level, where we saw the supply was very heavy at that point of time. And we have seen in the second half the liquidation took place from the Nifty front, taking Nifty below 23,000 mark, due to which the call right portion got added up more strongly at 23,100 and 200 strike. So in today's scenario, as we are seeing that India VIX also increased by 6% in yesterday's session, due to which the range for the intraday Nifty has also increased. The range for the Nifty on an intraday basis now stands at the 300 points. As much as the India VIX gets increased on a daily basis, till that point of time we will see the range on the intraday front of Nifty will also increase. So volatility will be very healthy if we look at the India VIX proportion. Once if India VIX goes below 18 levels, then only we will see some stability. Till the time it's trading above 18 level, till that point of time we will witness the volatility to be on the higher end. And the coming trading session, we expect India VIX to go towards the 28 to 30 level in next 1 to 2 weeks of a trading session. While on the downside, the support for the Nifty lies at 22,800 level, where we are seeing that the put rider position is holding strongly. Once if Nifty goes below 22,800 level on closing basis, then we will see the profit booking on the major end. But once if Nifty is not going below 22,800 level, till that point of time we will see Nifty to remain in the range of 22,800 to 23,100 mark. While on the stock specific and sector specific front, counter that looks positive in today's session will be from the PSU counters. SBI, Bank of Baroda looks positive, while another counter that looks positive is REC and PFC. This both counter also looks positive. We have seen the major OI position got added up in yesterday trading session, due to which the momentum will be witnessed in today's session also. That's it from Better Different. Thank you.
Yeah. On the result side, Life Insurance Corporation, that is LIC, result was okay. APE grew by 11% year on year. VNB was flat year on year as margin declined to 17% versus last year's margin of 19% in December quarter, 20%. Market share was stable quarter on quarter at 58.9%. However, at least now since the last 2 quarters, LIC has stopped losing market share, which was the case earlier. Management has guided that they will focus on gaining market share going forward. So at least the vibes that the management is giving and showing in the numbers since last 2 quarters is that company is managing to grow at least in line with industry. So stock is trading cheap at 0.9 times market cap to EV, and we are positive from it on long-term perspective. Arman Financial Services result has improved, led by NIM expansion, although collection efficiency has deteriorated. Credit cost was also elevated at 3.6%, which is almost at a 10-quarter high. Net NPA was flat at 0.3%. As I said, collection efficiency stood at 96.6% in March versus a steady state number, which was continuously above 98% level since more than a year now. We have seen this trend of some disappointment on the asset quality front and some stress across all MFIs in the Q4 results, which in fact is seasonally a strong quarter, but asset quality has deteriorated across the board. AUM continued to grow at 8% sequentially, 36% year on year. We are neutral on Arman Financial. Thank you.
Good morning. SH Kelkar and Company Limited posted the results, and results has improved both in terms of top line and margin front. Revenue grew by 12.8% on a YY basis. Overall performance was supported by increased volumes and higher revenue that led to better operating leverage. Also, it has improved contributions from small customers. In addition to this, the company has gained traction from a global MNC account. For FY24, it has an order book which is double the orders received in FY24 from this MNC customer. And the management expects this relationship to get strengthened over the next 3 to 5 years, which will support their vision to be a global leading player in fragrance and flavor companies. In terms of profitability, EBITDA margin reported at 16.5% versus 14.2% in the same quarter last year. And with this, the EBITDA has grown by 31% on a YY basis. On the negative front, there was a fire incident at Vashivali facility on 23rd April, which is being managed by the company with the business continuity plan, where the production has shifted to alternate sites and it has resumed servicing to its customers from 30th April. So in the near term, it will focus on the recovery of operations due to this fire incident and ramp up of its operations at alternate sites. Also, it will focus on ramping up its newly commissioned Indonesia facility to support its export markets. Currently, the stock is trading at a PE of 22 times to TTM EPS, and the near-term outlook remains neutral on account of expected weak performance of in Q1 due to fire incident. Flair Writing Industries Limited result was okay. Revenue degrew by 3.9% on a YY basis. It has observed subdued demand from OEMs, and its focus on its own brand sales has helped them to offset the impact of the same to an extent. During the quarter, revenue contribution from OEM stood at 15%, and the rest is from its own brand sales. Company's share of revenue from exports stood at 24%, and the same is at 19% for the full year. In the press release, it has highlighted that the company's stainless steel bottle segment has made a breakthrough and are now available in modern trade and general trade. Also, its paint segment continued its growth across brands, and creative segment has grown at a rate of approximately 28% during the year. In addition to this, it has signed an agreement with Disney for branding their characters for a range of stationery, arts, and crafts product. Company's EBITDA margin reported at 20.2% versus 20.5% in the last year, same quarter. The stock is trading at a PE of 37 times to TTM EPS and will provide the outlook post today's con call. Sumitomo Chemical posted the results ahead of expectations. Revenue grew by 3.5% on a YY basis, and EBITDA margin reported at 20.8% versus the expectation of 15.5%. The stock is trading at a PE of 46 times to FY25 EPS and will provide the outlook post con call. Thank you.
Commodity team can take the call forward.
Yes, thank you very much, Jan. Good morning, everyone. So yesterday we had witnessed pullback in commodities, and for the day we might see continuing it. So gold one can initiate a buy around 71,850 with a stop loss of 71,650. Prices should hold the support around 71,700. So on upside, we can test. Prices are expected to test 72,350 to 400, whereby profit taking is expected. And for trading purpose, one can also initiate a sell with a stop loss of 72,550. And silver, we are expecting prices to test 95,300 and 95,800, which is a resistance zone where profit taking is expected. So if prices are sustaining about this level, then we might see fresh buying in the white metal. And in copper also, we are expecting prices to test 905, 910 levels on upside. So maintain a stop loss of 891. Zinc also, we are expecting 275, 277 on higher end. So buying on dips in zinc is recommended. Crude oil, we are expecting prices to test 6,600 to 6,650 on upside. So buying around 65.30, 65.20 is recommended, and maintain a stop loss of 64.70. In natural gas, we are expecting prices to test 207 levels, and there could be a pullback if prices are sustaining above 207 levels. So maintain a stop loss of 200, and on upside again a pullback till 215, 18 is expected, whereby profit taking is advisable. So that's it from us. Thank you very much.